DeFi remains one of the most overlooked crypto niches, and I think that really comes down to two main reasons. The first is that DeFi is an old niche. It means that a lot of people don't think that DeFi holds a lot of value anymore in comparison to new and younger, shinier niches within the crypto ecosystem. And then the second is that a lot of the tokens associated with DeFi protocols were next to useless when they were created. There was no real driver for value accrual other than for governance. But I think ignoring this niche altogether is a completely rookie move, especially as a lot of protocols out there have now refreshed their tokenomics, and because a lot of the protocols out there are now well established and have been tried and tested. DeFi remains one of the best use cases that has ever stemmed from the crypto industry. Being able to borrow, lend, save without KYC checks, it's open to literally anyone, anywhere in the world as long as you have a crypto wallet. That is a massive win. So in the midst of a bull cycle, I have no doubt that there will be some opportunities approaching on the horizon. And because of that, I want to dive into this OG DeFi play in today's video. It is an OG play. Most of you will be familiar with the name, but it has changed significantly since it was launched. So it's time to take a deep dive look into the rebranded world of Aave. If at the end of the video you've enjoyed this analysis on Aave, it would be great if you could hit the like button down below. It really helps the channel out. I would love to have you as a subscriber on the channel, and if you don't want to miss out on any future altcoin deep dives such as this, then please hit the bell notification icon down below too. I see it as my job to help as many crypto investors out as possible, and as part of that, I put out my 80/20 crypto newsletter on a weekly basis, just one email per week, where we dive deep into altcoin projects like this, alongside looking at the key signals from the previous week so that we can set ourselves up for the week ahead, and also what the longer term trends might be. So if you're looking for a crypto ally in this maze of crypto madness, the 80/20 newsletter might be of interest to you. And if you would like to join and become a subscriber, I'll leave a link to that in the description below. With all of that out of the way, now let's dive and see what has changed in the world of Aave. So as mentioned, Aave is thought of as one of the OGs in the DeFi space. But what does it exactly do? And at its core, it is still a borrowing and lending platform. So it allows traders and investors to lend cryptocurrencies in return for APY, and also borrow cryptocurrencies in return for interest. One of the big factors here is that all loans on Aave are over collateralized, and that's common amongst other DeFi protocols. And that means that there is more collateral deposited in Aave than the loan value. However, and this is a big however, Aave is not the same protocol that it was back in 2021. It's now on the third generation of the protocol, and that has brought with it increased functionality, which I want to dive into. So as we can see on the website, Aave's product suite can now be broken down into two main categories. We have the app and we have GHO, otherwise known as Go. So the app is the borrowing and lending protocol that we're used to. That is what Aave is most well known for. And then the GHO, this Go, is Aave's native stablecoin, and that is backed by assets held inside the Aave application. So starting with the application, the lending and borrowing protocol is now in its third iteration, and the third iteration, which is Aave v3, brought with it a whole host of new functionality. So alongside being able to borrow and lend a range of different cryptocurrency markets, there is now something called portals, and portals now allow liquidity to flow between Aave markets on different blockchain ecosystems. There is now also something called high efficiency mode, or E mode, and E mode allows for higher borrowing power for those looking to borrow and lend assets that are correlated in price, like DAI and USDC would be. So they're correlated in price, they're effectively the same value. And if you are looking to borrow and lend something of the same value, this gives you more borrowing power. And then outside of the application, we have the Go stablecoin, so GHO. And this is a stablecoin. It's a USD stablecoin backed by assets held in Aave. And the idea is that you can mint GHO by supplying collateral in Aave. You earn interest on the collateral while the value of GHO is pegged to the US dollar. So it appears that Aave is taking a lot of inspiration from the likes of DAI and MakerDAO from the Maker ecosystem. So Go is minted when Aave users borrow it against crypto collateral. Another interesting aspect to the Aave ecosystem that wasn't there back in 2021. So now let's take a look at Aave's history, because this is an old project. Back in 2017, Aave started its days out as a protocol known as ETHLend. The protocol was founded by a guy called Stani Kulechov, who, despite a background in the legal space, found that the financial services industry was one of the best applications for smart contracts technology. So there was an early 2017 initial coin offering, which we can see down at the bottom here. We can see the ICO took place in, we had a pre-sale and then an ICO with a price of $1 and $1.84 back in 2017. There were then a couple of funding rounds and venture rounds in 2020 alongside the token generation event and its distribution in October of 2020. So that is when it was distributed to the public for the first time. Now, in this period from 2017 to 2020, the protocol and the coin were rebranded from ETHLend, and Lend was the coin, to now Aave, and Aave is also the name of the coin. Since then, we've had multiple launches of the Aave protocol. So Aave version 1 was the original. We then had the launch of Aave version 2 in December of 2020, which brought with it upgraded flash loans and collateral swaps. And then finally, in 2023, we had the launch of Aave V3. And the product suite was then wrapped up by the most recent edition of the Go stablecoin. Now, the Aave token, so AAVE is the token, and this is described as the center of gravity for the Aave protocol in terms of its governance. So when first launched, governance was Aave's primary use case, giving holders the right to vote on changes that happened within the Aave ecosystem, and we can see that here. However, there are now subsequent use cases for the Aave token, including liquidity pools and also cross-chain functionality. And in addition to these three use cases, there is also a safety module where Aave holders can stake their Aave tokens to help support the protocol's safety in case anything were to go wrong. So this helps to offer insurance to Aave users. So the market cap of Aave currently stands at $2.25 billion, which places it firmly in the large cap category of altcoins. Out of a total supply of 16 million Aave, 14.97 million are in circulation, so there is only 1 million outstanding. The majority of Aave tokens are out there in circulating supply. And if we look, we can see that Aave peaked back in the 2021 cycle, launched to the public in 2020, peaked in May of 2021 at a price of $630. And then throughout the bear market has fallen to a low of $50 and has recently climbed up to a price of $150. So 3x the bottom market low. If we then change to the market cap chart, we can see that the same thing is represented in the market cap chart. We had a peak in May of 2021, and since then we have seen market cap fall off. But most recently, we have seen a turn and market cap start to climb. So market cap currently, as I said, is 2.25 billion. At an all-time high price, it was 8.03 billion. And now we come to the part in the video where we need to assess Aave's upsides and risks. What are the things that could drive the demand of the Aave token in the future that could therefore shoot price higher? And what are the things that could strip away that demand or overinflate supply that could make the price of Aave fall? What are the things on each side of this that we need to evaluate? And starting with the upsides, Aave is one of the most battle-tested and battle-hardened protocols in the whole of the DeFi space. It has also proven market fit. The demand for Aave has been proven without a doubt, and with increased use could therefore come increased demand for the Aave token. And this is reflected in the revenue that it's generated, because Aave appears to be one of the very few profitable applications that we have out there. So according to Artemis Terminal, where we are right now, the protocol has been averaging approximately $140,000, $150,000 per day since July of this year. And we can see that it's taken a slight uptick throughout October. We're now on a slight bearish trend, but on average, about that $150,000 mark per day. And those revenues have been increasing. Then if we quickly jump across to DeFi Llama, we can see that the total value locked inside Aave has also been on the increase recently. So since September of 2023, October of 2023, the TVL has increased from a price of 4.5 billion to a price of today, $14 billion. And it's the same story when we look at ETH. We can see that actually it's nearing all-time high values of 5.26 million ETH equivalent. That means that the total value locked in this protocol isn't just increasing because all of the token prices are increasing, it's actually being used more and more by ERC20 tokens. Then if we look quickly on the Ethereum blockchain itself, we can see that Aave is number 2 in the list by TVL. The only application that is outpacing it currently is Lido Finance. Aave is number 2, and then that's followed closely by the eigenlayer. Then another upside, briefly going back to this Go stablecoin, because this Go stablecoin is bringing in a new revenue stream to the Aave ecosystem. So instead of profiting from the difference in interest rates between lenders and borrowers, which was its old model, Aave gets to now keep all of the interest received by those borrowing and minting the Go stablecoin. Then earlier this year in July, we saw Aave release a brand new value accrual mechanism called AAVEnomics and an update to its AAVEnomics, whereby the protocol buys back the Aave token using excess profits. And what's important about this is if these buybacks eventually occur, it means that more and more Aave could be stripped from the circulating supply. The only thing that's less clear about this is the timing within which it will be implemented. And then finally, going back to Aave's price, despite most altcoins suffering throughout the summer, the price of Aave was actually up against most other altcoins, including the likes of Ethereum. So even though altcoin appetite had subsided, appetite for Aave had been increasing. So those are quite a few upsides to the Aave protocol and the Aave token. But now what are some of the risks that we as crypto investors should take into account? Well, the first is that there is no new and shiny effect on Aave here. It is an old project. It's been known about for a long time. And while on the one hand, that means being battle tested is a great thing to see, it also likely means that the upside here is going to be nowhere near as high as with a brand new DeFi platform that catches a lot of early momentum. Then another risk that is the same with all DeFi applications is an inherent risk, and that is smart contract risk. If something goes wrong with the smart contract, or worse, a smart contract is hacked and the user's funds are withdrawn, this will definitely negatively impact the price of the Aave coin, especially if the safety module has to be used. The application has actually been through hacking attempts in the past and managed to survive. It's pushed through, but a large enough attack always has the possibility of wiping out the protocol. Now, the final risk for me comes down to Aave's market dominance, and we can see Aave's dominance chart here. We can see that it peaks at all-time highs back in, I think it was February of 2021, where it reached 0.56%. It then peaked again later in May, but since then it has fallen off because more projects have entered the ecosystem over the last 2-3 years. Thousands of protocols have increased. Thousands of protocols have entered the market, and therefore the market share of existing protocols has dwindled a little bit. It has most recently seen an uptick, but still we're down at 0.09%, 0.1%, and that means that the market cap of the entire crypto ecosystem has to exponentially increase for Aave's smaller market share to be worth the same as what it was back in 2021. And that is potentially a possibility. It's something that I'm expecting, but I'm of course biased. But that still is a risk that we need to take into account. If the total market cap only reaches what it did back in 2021, because of Aave's smaller market share, it just won't reach the same value that it did back in the 2021 cycle. And that's everything that I have for the Aave protocol. This is a truly impressive and battle-tested DeFi protocol. There's no doubt about that. But just because it's the largest lending and borrowing protocol in the Ethereum ecosystem, should it hold a position on an investor's altcoin shortlist? I dive into these extra details inside my 80/20 crypto newsletter. So if you are interested in gaining an insight into my own personal opinion on altcoins such as this, that's the place to head to. I didn't mention earlier, but it's completely free. Sign up to the list and come join the community. I would love to have you as a subscriber over there. A bet on Aave would be a bet on the DeFi ecosystem. And that means if you think the TVL of the DeFi ecosystem is going to increase and grow in the future, the chances are the TVL on the Aave platform are going to increase alongside that. But then you need to take into account, will this be a 50x returner, or will this sit within the 6 to 10x range? Thank you so much for watching this deep dive on the Aave protocol. I really hope you found some value out of it. I'll see you in the next one.